Hey everyone, welcome back to Corporate Decoder, the place where we uncover the juicy details behind corporate moves. And today it looks like Greenwave Technology Solutions is doing a bit of a makeover, a real shell game, if you will, with their stock. Let's dive right into what's happening with Greenwave Technology Solutions. They've just filed a report that's all about a big change to their stock. And while it might sound a little complex, we're going to break it down so you can understand exactly what it means for the company and its investors. This tells us it's a current report, meaning the company is announcing something important that's happening right now. This is our company, Greenwave Technology Solutions, known for trading under the ticker symbol GWI. And they're listed on a pretty major stock exchange, the Nasdaq Capital Market. This means they're a publicly traded company and their stock movements are watched closely. Alright, here's the main event. Greenwave is doing a reverse stock split. Think of it like this. Instead of having many small pieces of a pie, you're consolidating them into fewer, larger pieces. In this case, for every 110 shares you owned, you'll now have just one share. This doesn't change the total value of your holding, just the number of shares you have and the price per share. They filed a document called a Certificate of Amendment to make this official. So this change officially took effect on August 22nd. This means that starting August 25th, all the stock prices and trades will reflect this new split ratio. If a stock was trading at say $1 after a 5 all-event Ed-Chen split, it would theoretically jump to around 110 split. It would theoretically jump to around 110 split. Every stock has a unique identifier. This is Greenwave's new one after the split. It's like giving your house a new address. This is an important detail for shareholders. If after the split someone was supposed to get, for example, 3/10 of a share, they will instead get a full share. This is beneficial for small shareholders as they won't be cashed out for tiny fractional amounts, which can be inconvenient. It ensures everyone ends up with whole shares. This confirms that if you owned, say, 1% of the company before the split, you'll still own 1% after the split. Your ownership percentage remains intact, which is standard practice. This clarifies that the total number of shares the company can issue, and the shares already issued, haven't been altered by this reverse split. They're just changing the number of shares for the common stock and the individual price. This is a bit interesting. The report is filed in August 2025, but it mentions a press release from a year earlier, August 2024, announcing the reverse stock split. This could indicate a prior attempt or announcement that is now being officially acted upon, or it could simply be a filing error or a misstatement where they meant to say August 2025 for the press release as well. Given the rest of the report states the split was approved by the board and stockholders and is effective August 22nd, 2020 meant to say August 2025 for the press release as well. Given the rest of the report states the split was approved by the board and stockholders and is effective August 2025 for the press release as well. Given the rest of the report states the split was approved by the board and stockholders and is effective August 22nd, 2020 meant to say August 2025 for the press release as well. Given the rest of the report states the split was approved by the board and stockholders and is effective August 22nd, 2025. It's likely they intended the press release to be dated in 2025 as well, perhaps to drum up awareness leading up to the effective date. This is basically a digital tag that helps financial data be read and processed more easily by computers. It's like putting a barcode on a product so scanners can read its information instantly. When the report is signed off by Danny Meeks, the CEO, this adds legitimacy to the filing. Do you open to why would a company do a reverse stock split? Usually it's to meet the minimum price requirements of stock exchanges like Nasdaq. If a stock price falls too low, it risks being delisted, meaning it can no longer be traded on that exchange. By consolidating shares, the company artificially inflates the stock price. For Greenwave, this often signifies they've been struggling to maintain a higher share price. It's a way to avoid being kicked off a major exchange, but it doesn't inherently fix the underlying business issues that led to a low stock price in the first place. It's like tidying up your room to make it look presentable, but not actually cleaning the mess. Now, let's talk about the bigger picture. When a company does a reverse stock split, it's often a signal that things haven't been going according to plan. It could be a sign of distress or at least a company trying to appear more stable than is. Investors typically view reverse splits with caution because they often precede a period of poor performance or are an attempt to mask underlying problems. The fact that they're doing a 1-for-110 split is quite aggressive, suggesting they might be significantly below a desirable price point. Looking at the overall company, Greenwave Technology Solutions is in the business analytics and IT services sector. Companies in this space often compete on innovation, efficiency, and service delivery. A low stock price might indicate they are facing stiff competition, perhaps struggling to secure new contracts, or that their profit margins are under pressure. This reverse split is an attempt to buy time and maintain their listing, but the real test will be whether they can improve their financial performance and business operations going forward. Without a fundamental improvement in their business, the higher share price from the split might not hold. In my opinion, this reverse stock split is a clear indicator that Greenwave Technology Solutions has been facing significant challenges in maintaining a healthy stock price. While it's a necessary step to stay listed on major exchanges, an aggressive split like this often suggests that the company's performance hasn't been strong. Investors should be wary and look closely at the company's financials and future growth strategies. The real question isn't whether they can manipulate their share price, but whether they can genuinely grow their business and deliver value to shareholders in the long run. This move itself isn't a bad thing if the business fundamentals are solid, but history often shows these actions are reactive rather than proactive. Alright, that's our breakdown of Greenwave Technology Solutions' latest filing. What's your take on this reverse stock split and what it might mean for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord link in the description below for more discussions. Thanks for watching. See you next time.